I recently had a tweet on Twitter go somewhat viral where I was talking about my trading journey. Talking about the fact that for over 5 years, I was trying to become a successful trader, and I was not only not making any money, I was losing a ton of money. I lost $15,000 from trading, from courses, and while working minimum wage, $15,000 is an unbelievable, life-changing amount of money. It was a heck of a struggle, but eventually things did click. Eventually I did get funded. I became a funded trader, and I even quit my job. In fact, I traded full-time for 2 years before starting a YouTube channel, before getting any other source of outside income, before even having an account on Twitter. I was purely a full-time trader for 2 years. And so in this video, I want to reveal the strategy that I ended up using to become a profitable and successful trader. I took countless courses, blew countless accounts. I took one course that was over $5,000 for 3 days here in Montreal. And really in the end, I learned that it's not the strategy, okay? There's a lot of other things that will apply to all of you, whether you trade SMC, whether you trade trend lines, regardless of the strategy that you trade. There were some major takeaways that apply to all traders from taking these very expensive courses. And in this video, that's what we're going to break down. So if you guys get value from this, I would actually really appreciate it if you could drop us a comment below. Let us know if you would actually like to see a really in-depth breakdown of this strategy. We're just going to give you a taste, just a little bit of a teaser of the strategy that I learned by taking all of these courses and spending all of this money. But if you would like to learn more, if you'd like a 30-minute, 1-hour breakdown of the strategy, let us know. I would be more than happy to make that for you guys. Okay, now that that is out of the way, first things first, we need to identify what is the goal? What is it that we're actually trying to achieve? This might seem silly, but by not breaking down and actually knowing what it is that we want to accomplish, aside from just making money, we can quickly start going down the wrong path. So the goal here is, of course, to get funded. If you want to grow your $500 personal account and try and compound that, that is fine, but I don't think it is the way to go. The goal here is to get funded. So we have established the goal, which means that everything that we focus on in trading in this video is all going to be towards accomplishing that goal. If there's anything that comes along that is not going to get us closer, we want to completely disregard it. Speaking of disregarding, it doesn't matter how you trade, whether it's SMC, any kind of strategy, it simply doesn't matter, which is why I want to start off with 5 major takeaways that I took from spending $10,000 on Forex courses. And these are lessons that you can apply regardless of the strategy that you trade. Number 1, any strategy works with a large enough sample size. What you need to do is you need to keep going. You need to work through and trade through the losses and stick with the strategy. I put this as the number 1 tip because for me, it was a massive game changer. You need to act and trade as if you are a casino. A casino doesn't care if they win the next hand or if they are profitable that night, because they know that the house's edge over time is going to play out. And for me, this was a massive game changer for me, because I would have a few losses in a row and I would start to think, oh, it must be my strategy. There's something I am doing wrong. But as we all know, losses are part of trading, and so we have to act like it. If you are going through a losing streak, whether now or in the future, it's going to be inevitable. You have to stick with the strategy, let your edge play out over time. It was a huge game changer for me. Number 2 is to find a strategy that fits your personality, a strategy that fits your psychology makeup. This was a big one for me. I started out as a pattern trader and I was making money, I was profitable, but it wasn't doing it for me. I was toying around with different strategies because it didn't scratch my itch. I really love fundamentals. I love going a little bit deeper into trading, how the market actually works, functions, moves, and patterns just weren't doing it for me. So I think this is something that isn't discussed enough. You need to ask yourself, what is your makeup? What is your personality, psychology? Are you very impatient, swing traders, scalpers, all those things? There's a lot of moving pieces. What I'm trying to say is it's very important to not just find what you think is the best strategy, find the strategy that is going to best fit your personality. Side note on that, if you are a full-time worker, well, you don't want to learn a trading strategy that revolves around scalping. You might want to be an intraday or swing trader, whereas if you're a full-time trader or want to be a full-time trader and you can stare at the charts all day, don't recommend it, but maybe scalping is for you. Number 3 is to keep it simple. Pareto's principle, the 80-20 rule. After taking tons of courses, I don't think I'm alone here. It's funny how things go completely full circle. You start out as a trader, you're doing things in a simple way. You learn a whole bunch of courses, gets complicated, and then you realize, oh, let's actually keep it simple. You go all the way back to where you started. That's at least the case for me. Keep it simple. It makes a huge difference. Number 4, another game changer for me was the higher the time frame, the better. Don't focus on the 1 minute, 5 minute, 15 minute chart. Maybe for execution if you have a lot of time on your hands, but for me, when I started to focus on the 4 hour and the daily, really get the big picture, the bird's eye view of the market, it made a huge change in my trading, made things easier, and I made more money. Number 5, the last one, focus on A+ setups. For me, fewer trades meant more money. It's easy when you're trading full time, you're trying to get funded past these challenges, to take trades that just barely fit your trading plan, but you really want to focus on those A+ setups so you have more time to do other things and you're just making more money. Okay, so now let's dive deeper into my actual strategy. How did I pass 4 $100,000 FTMO challenges, become a funded trader? We're gonna look at execution, risk management, technicals, and fundamentals at the end. Again, we're just giving you a taste of all this, so if you would like to learn more, let us know in the comments. But when it comes to risk management, obviously it is the key, but let's get more specific. Yes, we want to be risk managed. We don't want to go full margin on any one trade. But when it comes to taking a challenge, it's different when you are a funded trader. But when it comes to taking a challenge, it's all about leveraging your gains. Now at Lark Funding, we just released our 3-stage program, which is going to allow you to do this better than any program because there is no daily loss limit. That means that once you start to build a little bit of momentum and your maximum drawdown level increases, because it's a static drawdown, you can now take larger position sizes. And that is how you can essentially pass in 1 or 2 trades. You have a win, depending on your risk reward, maybe you risked 1, made 3%. You can now essentially risk 3% on that next trade to make 9%, and you're not actually over risking, because if it's a loss, you're back at break even. And that is the beauty of having no daily loss limit. Even on any account, our 2-stage that has a 10% max drawdown, once you get a little bit of momentum, you want to leverage those gains, increase your position size to pass. That's gonna help you pass faster. It's gonna help you pass in fewer trades. And that's why focusing on those A+ setups doesn't mean that you're going to need 2 months to pass. You can still pass in a small amount of time just by leveraging your gains. That made a huge difference for me when I was taking my FTMO challenges, because they still had a 30-day time limit. So it was a huge game changer, but I still think it applies a lot today, even though there are no time limits. Okay, so we're now going to do a technical breakdown of pound yen. This is one of my favorite pairs to trade. I'm not gonna go too overly in depth with the strategy and how I approach it, but I think by doing a top-down breakdown, how I would attack the charts from the very beginning will be helpful for you guys to just get a general broad sense for how I actually approach trading and what my strategy is all about. Like I said, I like A+ setup, so I focus on the daily time frame. I will take a look at the monthly and weekly charts to see where the moving averages are. I like the 100, the 200, and the 800. I used to use the 50, but not as much anymore. Okay, so this is GJ on the daily chart. So we can see here obvious uptrend. We'll want to start off by seeing if there are any obvious trend lines. I only like using the most major ones, but this is one that we would likely want to consider. So what we want to do first off, after drawing our trend line, seeing the big picture, is we want to put support and resistance levels, the ones that are the most obvious. I always like to say, what would your 8-year-old niece or nephew point out? Whatever their answer is what we want to throw on here. Support and resistance, in my opinion, are zones. They're not just X prices, so we will refine these as we go. But to start, we're looking at the most obvious ones. So maybe one in here as well. I don't know why they're red, but what we will do is we will make them solid lines. There's all a reason for this, and we will make them white. So now that we have our lines here, like I said, we want to refine them further. We want to see if we can turn these zones into a psychological level, a round number. Now, on most pairs, this is going to be very easy. However, on pound yen, the psychological levels are the 0.200s and the 0.800s. Don't ask me exactly why that is, but if you backtest, you will see. They react to these levels much better than they react to just 146.0, 186.0. So we go into our coordinates and we can see here 176.6, very easy to round to the nearest one. We'll do 176.8. So we put that in and it only moves ever so slightly. And now our resistance / support level has now also turned into a psychological level, which makes it that much stronger. This one here, 183.0. So 183 might actually be the level, but if we were to adjust it to 183.2, you see it doesn't move that much. We still get all of our touches here and it works quite well. So that is the level that we're going to use. And then lastly, this one is quite easy at 186.6. We'll move that up to 186.8. Perfect. We now have our daily view. Let's jump down to the 4 hour to see what it is that we have to work with here. First off, are there any trend lines that we can also add? It doesn't look like it. There was one here, but that broke. We now want to see within our daily zones, are there any 4 hour levels, any key levels within these areas that we want to pay attention to? One is very obvious right here. I like turning these into dotted just to differentiate them, but again, that's just a personal preference. You can do anything that you would like. Your chart, your choice. So we'll stick with that one. I don't see anything else immediately here, but under this one is quite obvious here. Maybe another one just slightly down below. Again, we want to use the zones that your 8-year-old niece or nephew would point out, okay? A+ setups only. So we're in a very strong trend here. So there's not as many levels as I think there typically would be. You're more than welcome to hop down on smaller time frames. We might even take a look at the 1 hour chart. This is how we are first going to approach it. Next up, I am a huge fan of Fibonacci's, the 38, the 50, the 61, even the 78.6 at times. We forgot to see if there was any that we could throw on the daily that are very obvious, and there's this one right here. There is a specific way that I like to approach Fibonacci in terms of knowing whether it's still valid or if it's been breached and we should no longer be using it. I won't cover that in this video, but keep it simple, but there are a few little things that can help refine things. We haven't bounced off the 38. We haven't touched it yet, but we came very close. We bounced off the 183.2 first. So the next levels that we want to be looking at is the 50 and of course the 61.8. And this is quickly going to get us into the execution part of things. This strategy is very simple. What we are trying to do is we're trying to find zones of confluence. Where do these lines, trend lines, fibs, key levels, EMAs, anything, where do they line up? Where can we find a zone where there's 2, 3 lining up in the exact same spot? Whatever the answer to that question is where we want to take a trade. So from a top level view, we can already see that starting to line up is the 180, this 4 hour level, along with the 61. We can see here the 38 and the 183.2. These seem a little bit too far away. I wouldn't want to take a trade here. We'd want to refine it a bit, but that is how we are trying to approach things. Let's hop back down to the 4 hour and let's throw on our moving averages. What's going on? You can see here that we got a bounce from this 100 here, but what do we have in play next? You can see that we have a trade potentially over here at the 38 and this trend line. The problem with this, however, is that it's going to take a lot of time. Let's throw a green line, a green box on there. If we look at our measuring tool, we're going to need to consolidate for 14 days, 2 weeks before the market would get here. So this is highly unlikely to actually execute. However, the 38 here with this 200 EMA, this could be a very nice trade that could come next week. The market could quickly drop and we could easily take this trade. So this is something that I would actually be looking to take. The question is, where do we enter? The answer to that is, what is our first confluence? We technically already bounced off the 183.2. So I wouldn't want to set my pending up here. I'd want to set it lower at the 38 fib right here. So we would set it here. If you want to split it, you put it a few pips above, but that is how we want to approach it. If the market decides to consolidate and we see this 200 EMA, it's a 200 SMA, excuse me. If we see this 200 SMA move above the 38, I would no longer be interested in this trade because it is only one confluence rather than the minimum of 2 that we're looking for. I like 3, but 2 is a good starting point. So that's a trade that we're looking to take right there. If you like to keep your chart clean, you're more than welcome to always delete these fibs. Another thing just to keep an eye out is this area right here, the trend line with the 50 could be quite nice. And then obviously we also have the 61 with this 4 hour level. So I like to put my zones like that and then we can delete them, keep it nice and simple. Maybe put a little text box so you know or can remember why you did that. Lastly, if we were to look for a sell, our most recent fib is from the top here down. We draw to the lowest point. We've already had a very nice bounce from the 38. So again, when I mentioned that there's little tricks and keys to using fibs, I don't want to use a fib that's already been used. The 38 has already been used, meaning that I would only be interested in potentially the 50 or the 61. The 61 is always, my bread and butter, my sweet spot. So we'd want to look at a sell here. there's no other confluence right now. So you're more than welcome to hop down onto the hour time frame, see if there maybe is a moving average. It's not something I love to do, but again, if you really want to be an active trader, you're more than welcome to. You'll get more trades, you'll have less, your win rate will be lower. But again, the law of averages will play out. As long as you stick with it, keep taking those trades, everything will should work out just fine for you. And in terms of the 50, there could be a little support or resistance here, but there's nothing crazy. So I'd really be looking at this 185.4 area for a sell. Again, I'd want my stop loss above or below, depending on a buy or sell. The confluence is minimum 1-to-1 risk to reward. Again, if you guys would like a more in-depth breakdown, let us know, but this is how I would approach from the top level down. GJ, what I would be looking to trade for the upcoming week. Very simple, just a handful of tools that I think are very, very useful, very powerful, but I think there's actually some interesting setups that might be coming on this pair. Okay, let's talk now about execution. You have a rough idea as to the technical approach that I took to pass my challenges, but the reality is any 5-year-old kid can chart. It's easy to draw a trend line. It's easy to draw a Fibonacci, a key level, support resistance. It's all easy. What separates the boys from the men is execution. Execution is really the difficult part, and it's the part that took me the longest to properly learn. One of the most game-changing aspects of my trading is when I finally learned how to properly use pending orders so that I could get those beautiful sniper entries. We're talking about trades where there's barely any drawdown. You just get in and the market starts to reverse. Obviously, it's amazing. Everybody likes it, but it also plays a huge factor psychologically because I no longer had to deal with drawdowns nearly as often. And so that's what we're going to talk about here, executions of using those pending orders. By looking at the technicals that we're using, we set pending orders on the areas that have the most confluences. Now, there's a couple of ways of doing this. Keep in mind, we're always going for a minimum of 1-to-1 risk to reward. We see some crazy stats at Lark Funding. Some traders have a risk to reward of less than 1, but they're winning 80% of their trades. Another trader just received a $7,000 payout, but their risk to reward was 9, and they only won 30% of their trades. So there's tons of ways of making the numbers work. But in terms of this strategy, I always went for a minimum of 1-to-1. Now, when you set the pending orders, it's very simple. You are simply looking for the areas that have the most amount of confluences. Ideally for me, that was 3 confluences minimum on the daily chart. Now, you're not gonna get a ton of these, but when they do, for me, that was the A+ setup, okay? Very simple. Find that area, throw that pending order on there. You put your stop loss just above those confluences. Again, if you wanna go a little bit more in depth, let us know, I'll make that video. The last thing to note on execution is because these entries can get so sharp, so sniper, sometimes you'll miss them, and it's heartbreaking when the market comes towards your pending order, just misses it by 3 pips and then completely goes your way. So one thing that you might wanna consider, which I sometimes do, is I'll split my pending orders. If I wanna take a 1-lot sell, I'll put half the lot right on those confluences, and then I'll drop the second half lot pending order roughly 3 to 5 pips away, just to help me get into the trade, because there's nothing more heartbreaking than missing a good trade. But like I said in tip number 3 or tip number 4 at the beginning, keep it simple. This is not a crazy strategy, but it works. Find those confluences, set that pending order, it will make all the difference. Lastly, I want to have a quick discussion on fundamentals. If you make a fundamental video on YouTube, it doesn't get nearly as many views, but kind of like SMC, fundamental traders are so passionate about fundamentals. And for me, I went down a massive rabbit hole, so deep that it was actually detrimental to my trading because I became more of an analyst than a trader. And this is something that I think a lot of fundamental traders struggle with. But I do think there is something to be said about fundamental analysis. The market is not moving because price hits a trend line, all right? If there's a major swing move in the market, it's because something is actually happening in the real world, and that is what's moving the market. And if we can understand and anticipate what is happening, what is going to happen, then we can get into the market and we can make more money. So I usually say that there are 3 levels of fundamental analysis. Level 1 or level 0 is you just completely ignore them. You don't pay attention whatsoever. If you're a short-term trader, a scalper, you know, maybe you're holding trades for an hour or two, I think you can, for the most part, disregard them. That's fine. Level 1 or level 2, again, depending on how you look at it, is you pay attention to red news events. I think that this is the bare minimum that any trader should adopt. You should know when there's an interest rate decision coming up. You should know when Powell is speaking. You should know when the unemployment numbers are coming out, because these are the events that are going to move the market. And if you enter a trade 5 minutes before and the market moves like crazy, you lose a ton of money. That could have easily been avoided. So pay attention to red news. That is something that I encourage all traders to do at a minimum. Lastly, level 2, level 3, depending on how you look at it, is if you are swing trading, a fundamental analysis is crucial, especially intraday trading. I think if you want to have a big picture view of the market over the next 3 months, am I going long or am I going short for the majority of the time on, say, gold or Euro USD? You can only really know this based on fundamental analysis. So I want to share a few resources that dramatically helped me, because again, I don't want to make this video an hour, 2 hours long and to dive into actual fundamental analysis. But here are a few resources that dramatically changed my trading. Number 1 is forexlive.com. There are analysts working on this website around the clock during each session. It's completely free. It's a phenomenal website. Anytime you see a major move in the market, just hop onto forexlive.com and see the article that they post for why it's happening. They're super quick. They often beat Twitter, and it's great. You get a breakdown, and they also have the session breakdowns where you can see everything that happened in the session. It's very easy to stay on top of what's actually happening in the market. If you just introduce that into your daily trading routine, I think it can make a massive difference. Speaking of Twitter, Twitter is a powerful tool for trading. You can use Twitter to follow analysts from around the world, and they are so fast at releasing data, releasing news for why the market is moving the way that it is. Things that you should be paying attention to. Twitter is fantastic. So definitely go find some analysts on there. I don't remember any off the top of my head, but there's tons out there that can help your trading a lot. And lastly, if you're completely new to trading, maybe you've never heard of this one, but most of you watching will have, myfxbook.com, great for their economic calendar. You can see all of the red news events. When I first started trading, I was paying attention to medium and high impact news. But again, as I began to focus more on those A+ setups, I completely disregarded medium news events. I still do to this day. Now I only focus on those high impact news events. Those 3 resources should help you at least get your feet a little bit wet in the world of fundamental analysis. I highly encourage all traders to, check them out, try a little bit of learning about how the market works in terms of fundamental analysis, but not everybody has to adopt it into part of their trading repertoire. There you have it, the strategy that I spent $10,000. I spent more than $10,000. I hope this video was helpful for you guys. As I said, the new 3-stage program at Lark Funding, there's no daily loss limit. There's no trailing drawdown. There's 75% reset discount codes, and the pricing is incredible. So the link for that is down below. And like I've said throughout the video, if you would like to learn more about this strategy, I'm more than happy to make a very deep, in-depth video for completely free if it helps all of you out. If you made it this far, I appreciate it. I'll see you in the next one, and until then, peace.